Hello everybody, how are you doing? Hope you are having a great 2020 so far. I want to send a quick video to get in touch with you folks as it's been a while since maybe I've spoken to some of you. So at least, I'm going to send a quick video email to see how you're doing and to give you an update on how the market is doing. Because you're probably curious on um, what interest rates are doing, what house prices are doing because of what the news is saying, true or not. Let me see if I can give you some quick boots on the ground facts with the real estate market. So right now, if you've seen the market report in the newsletter that I did just send out, you'll see that, of course, prices are going up. So the year-over-year summary between this time last year and this time this year, everything is down except prices. So sales are down, new listings are down, days on market is down, like active listings and things like that are down. It just sales are going up. So is that a supply demand issue? Yes, a little bit. There's a lot of people jumping into the real estate market right now because interest rates are low. They are going up. I'll touch on that in a minute. But it's a bit of a frenzy, of course. I think we all know that right now. Are we in a bubble? We're probably in an everything bubble, right? Like all asset classes are up. And if you guys have spoken to me personally in the last few months, that's how I kind of feel. Now, is that bubble going to pop? I don't know. They said it was going to pop years ago, right? It all kind of ties into inflation, right? With all the quantitative easing and the economic stimulus that they've pumped into the market. It has to go somewhere, and it's going into the various asset classes, stocks, commodities, real estate. So it does lend out there. So everything else, sales, new listings are down. Prices are up 27.5%, which is actually really good if you're a homeowner. Now, touching back on inflation, right? So this official CPI, they're saying is 5.1, right? So that was in the Market Watch newsletter, page on the back page of the front letter that I send out. So you'll see the stats there. So I always say that the CPI is the CP lie. So if you understand how the CPI works, it's a basket of goods that the consumers buy, and then the economists, they gauge, okay, what are the prices on this from this point to this point, and inflation adjusted for that. But the things that they don't tell you is that the basket of goods, they change what goes in it. So it's not a good indicator of data, right? So like, for example, beef and steak used to be the indicator in the CPI for many, many years, and they've taken it out and they've replaced chicken in it. Well, you can't gauge inflation on beef and chicken because it's apples and oranges, right? It's not the same thing. So they say, oh, that's because of, beef prices are going up, so most folks are going to go switch to chicken, so we'll measure chicken. So that's why I said the CPI is a CP lie, right? Because if you look at gas prices and house prices, it's more than 5.1%. I would say it's probably like double digits, right? Have a look at M2 money supply, and you kind of understand that. It's a long story, but I'll show you some stats on that later on when I can. So that's what's going on with kind of the real estate market right now. We're super hot. Everything's still selling over asking. Is it a good time to get into real estate? I wouldn't necessarily caution against it, right? Because we don't know when the market is going to come down. I don't see it coming down anytime soon. So, the longer folks wait, the more things are going to get a little bit more expensive, right? Because they're not going to fix inflation anytime soon. They're going to raise interest rates. So interest rates have gone up 0.25%. So prime lending rate right now is 2.7. Like the bank benchmark rate is 0.5. So prime is 2.7, and then the banks base their interest rates off that. Now they're planning to raise interest rates a little bit more throughout the year. So Bank of Canada, they want to get super aggressive. I'm always critical of the central banks because they're the ones that created the inflation problem. Now they want to fix it. They're just kind of like moving levers and things like that. So they want to raise interest rates. I think they originally said, 8 times this year, which is kind of ridiculous. Unless they do like 0.1, 0.1, 0.1, then that makes sense. But if they're doing quarter percent, that's too much. So was recently on a call with Benjamin Tall, the senior economist for CIBC, and he meets with the Bank of Canada often. So he always tells them, listen, you guys need to chill. Don't crank interest rates because you cranked quantitative easing. So raise interest rates on a slower pace, and that's what we kind of saw. We saw a slow initial 0.25 raise for the Bank of Canada. Does that do anything to the market? No, because interest rates, keep in mind, interest rates go up and down all the time, right? So everyone's used to low interest rates right now. So they're shocked when rates go up, but it's normal. It's fine. I think rates should go up, but raising it like a percent immediately, too much. 2% in 1 year over the course of a year, probably too much. So we're gonna have to see what the Bank of Canada does. Small incremental interest rates hikes will be fine. The Bank of Canada has to be careful on how much they increase the rates, because it might play into the stock market too, right? If you raise interest rates too much, there's less liquidity in the markets, right? And they don't want to pop any bubble, right? Because they've created all these bubbles, right? So they want to kind of do a deflationary kind of thing, which also can be a risk as well, right? So you have inflation as a risk because you lose your purchasing power, but you also have deflation, which means that things just kind of, wages are down, everything's cheap. Like in 28, when the market crashed, everything was just like at a bargain because there wasn't enough economic stimulus, and that's when they brought in QE, and that swung the dial on the other side. So really kind of interesting task ahead for the Bank of Canada to what they want to do with interest rates. Is that going to affect house prices right now with that interest rate? No, they need to raise the interest rates a little bit more for the heat to come out of the market, for the market to slow down. So yeah, that's what I would say. The forecast for the next at least quarter is you're going to see still a seller's market, strong price growth for investors. Right now, we're looking for properties that cash flow. So we're going a little bit outside of the GTA. So if you guys don't know, I work a lot with investors. If you folks want to get into investment properties, I know you might have a lot of equity and you need some extra cash right now because inflation's kind of eating away at things too. Getting yourself into an investment property or another income producing asset for like crypto staking or dividend paying stocks and things like that will help alleviate some of your some cash flow problems if you do have that. So yeah, if you did want to have a more in-depth discussion with how to pull out equity, I can get you in contact with one of my mortgage brokers that can help you figure things out on the financing side there too. So yes, I'm working a lot with investors. I do have a couple new designations. If you folks haven't realized, I do have a military relocation designation. So I have helped some military folks come up from the US. They're transferred into Canada. So I am qualified to that. I think I'm one of the actually qualified folks in Canada. It's a US military designation. There's only like a handful of Canadians that have it. So I'm not too sure if you folks have military family members or whatnot, but that I'm kind of the go-to guy for military relocations, as well as a luxury designation. So of course, none of us live in many luxury homes versus a lot of homes now are like $1 million, right? But I do have the luxury designation for that to help upper higher net worth clients and for more boutique service for that. So just want to give you a quick update on the market, what I'm doing. Curious what you folks are doing too. If you want, you can just reply back to this email if you have any questions or comments, or of course my phone number and email will be on the email here too, right? So hope everybody is going to have a great spring. I do have some time to take on some new clients. If you folks do know anybody that might need some help and assistance, feel free to reach out. And other than that, hope you folks stay safe, and I'll talk to you soon.